Hey there traders, thanks for joining me for this free video from thestockbandit.com. Let's take a look at the indices as we head into a brand new week of trading. We know that understanding some key levels for the major market averages can kind of give us some guidelines for where this market currently stands, where it's been, and where it may be headed. So, last week was obviously an interesting week. We got lots of back and forth for the first several days, and then we finished higher on Friday. Now, each of the indices, with the exception of the NASDAQ, were either flat or up on the week. The Russell finished flat, but the S&P and Dow both posted decent gains for the week. NASDAQ was just down slightly, but all in all, this has just been a little bit of a rest phase for the market, and that's been really healthy to see. So, I say that because we had seen such a huge run here off the low after this failed breakdown down here a few weeks ago, that to make a move like that in straight line fashion like we got, we needed to kind of move laterally or pull back some to kind of work off this overbought condition that had developed. That was just not a sustainable pace. But now we've put in a little bit of rest, and this market technically is looking and acting pretty well. Last week we saw for the NASDAQ a few important tests. Now this 2600 area has been a big zone. This index found support there in March. It did it again back in June. We then rallied back up off this August low and struggled to clear that level after attempting to do so a few times. Now we briefly got through it here a few weeks later, but it wasn't able to hold. We rallied back up, failed again at that level, and now we've held this 2600 area for the better part of 7 or 8 sessions now, so about a week and a half. Now last week on Thursday we saw a close for the NASDAQ at 2598 and change, so it was within 2 points of that. But we also saw a test here of this green line on Thursday intraday as we got down 2 points from this 2555 level. Now keep in mind that was the recovery, the initial rebound off this big waterfall move to the downside. We bounced back up and failed right there at 2555, and since then we've seen that level get respect as well. So we respected that level, and we've been hanging around this 2600 area on a closing basis. For the most part, we've obviously held above it, with the one exception being Thursday, finishing just 2 points under that. But we also saw last week a test of the prior week's high, which was to the exact number 2667. That's short-term resistance here for the NASDAQ. If we can punch through there, then this recovery effort may be able to continue. But for now, the NASDAQ still kind of in this holding pattern here, still holding up well. This is a lot of back and forth action in recent days, but it's healthy to see. All right, S&P 500, that's next. Last week we kind of churned here for a few days, and then Friday we saw the best volume of the week. And now that did come with with option expiration day. So that's to be expected. But we did see a nice push to new recovery highs. Okay, the prior recovery high was right up here at 1230, and we made 1233 earlier in the week, and then pushed to 1239. Now the next zone that I'm really watching here for the S&P is right up here. This is June support. Remember, we had that sell-off in June, and then based here for a few weeks, found some support here in the S&P around 1260. That's kind of the next stop that this index might be gravitating toward. So I'm going to keep a close eye on that area. For the Russell, this index has really been dealing with the 712 to 713 over the past several days. Just kind of hanging out here, moving laterally for the past week and a half after this big run-up move. So it's acting really well. This green line right here is at 718. This index needs to get through that in order to make an attack at the current recovery intraday high back here at 737. But overall, this has been a good rest phase for the Russell. Lots of back and forth action, and now has potential to build on that short-term base. And then finally, the Dow. This index added 2.3% on Friday. We've seen this 11.5 and change area prove important. You know, that was the oops, clicked on the wrong thing. That was the low here, 11,555 in March. Okay, and then we saw the recovery high off this initial sell-off. We rebounded back up here to 11,529, and once again that level has been respected multiple times. We've been churning back and forth across that level for a week and a half, 2 weeks here for the Dow, and then finally Friday we pushed to new recovery highs, closing past 11,808, and you know, kind of the next spot for this index is not far above. That's June support for the Dow at 11,862. So we're not far from kind of that next hurdle to clear, but for now we're through the short-term resistance here at that 11,650 zone, as well as this prior recovery high at 11,716. So making some headway here with potential to build on it. Keep a close eye on this 11,860 area in the days to come if we do see some additional strength. Not that that will prove to be a big level, but it may be a short-term level that we'll need to contend with. But overall, this market is still very headline sensitive. We're still very gappy. For example, one last point I just ought to make here. On Friday, the NASDAQ, you can see that it was up 38 points on the day, almost 39 points on the day. Okay, here's the open, 2630. This is the close, 2637. We were up a whopping 7.16 points from the opening bell to the closing bell. So this looks like a big day, up 1.5%. That's a good solid gain. But bell to bell, we really didn't see a whole lot of movement out there, and that's really making it tough right now to manage a multi-day strategy. Had you been getting long you know, some multi-day trades, some swing trades into that strength on Friday morning, you know, you had to chase some stocks higher most likely, and you probably had to manage your position and kind of whittle it down a little bit to offset the added risk for chasing that entry. And now you're faced with some over the weekend, or you know, some overnight gap risk as this market continues to be very fixated on Europe and the headlines and the rumors tied to that. So it's still a tricky market here, although the technicals are really improving, especially from where they were a few weeks ago. So let's see if the bulls can continue to kind of maintain their short-term edge and build on it in some way. Have a great week of trading. Thank you for joining me for this video. I will have more for you soon, but in the meantime, trade like a bandit.